Hello, and let's take a look at exercise 14-16, in which we're going to look at what happens when we make a mistake in the amortization schedule. Here we have a company that's acquired a packaging machine from Lawrence Specialists. They completed the construction on June 1st, 2022. In payment for the machine, we issued a 3-year notes payable, and this is an installment note payable with equal payments at the end of each year. The payment includes interest at the rate of 10%. Lawrence made a conceptual error in preparing the amortization schedule, which they did not discover until 2024. The error has caused us to understate interest expense by $45,000 in 2022 and $40,000 in 2023. So they've asked us to explain what's the impact of making these mistakes in our financial statements, what's the correcting entry we'll make, and how do we proceed with this? What else do we need to do? So let's first start out by saying what's the impact of this mistake we made. So let's look at the incorrect entry that we made. Before we look at what the correct entry should have been, or what we are going to do now, the correcting entry, let's start out with the incorrect entry. We understated expense by 45 and 40,000 in the past 2 years. So my interest expense is understated. My notes payable is also, it's going to be eventually understated in the journal entry. Okay. The cash amount was correct. There was no mistake in how much cash we paid. If we had made a mistake in cash paid, we would have found out a long time back about it, because the person we owe the money to is going to let us know immediately that we made a mistake over there. So the mistake is just in our journal entry. Our journal entry is interest expense debit, cash paid, and the difference between the two we have over here as how much our notes payable is decreasing, the outstanding balance is decreasing. So in this case, what we're looking at over here is, because this was understated, this got overstated, this number got overstated. Nothing wrong with cash again. Now, how do we correct the mistake? Interest expense for the past 2 years. What happens to interest expense at the end of each year? All temporary accounts get closed out to retained earnings. So interest expense was understated, which means retained earnings is overstated. So now I will come and debit the retained earnings, $85,000. That's a 45 plus 40. That gives me 85,000. And notes payable. By debiting notes payable, I decreased notes payable mistakenly by 85,000. I put it back into the balance sheet, 85,000 notes payable. So bring it back into your books. So you had understated a liability and overstated equity in this mistake that you had made. So now that you've done the correcting entry and you know what you have done, you need to share this with the people who are going to look at your financial statements. So the first thing is I need to retrospectively restate my 2022 and 2023 financial statements. The reason we do that is when we present the 2024 financial statements, we have 2 more columns. We have the 23 and 22 numbers for presentation purposes and comparison purposes. Now that we know there's a mistake, I have to go back and change those. If I was just issuing the current year's financial statement and I did not have to show last year's financial statement to anyone, or an individual looking at the current year's financial statement is not looking at last year's, then I don't have to worry about it. I just make my correcting entry and I can move on. But that's not true. Therefore, I have to do this retrospectively. And in my notes disclosure, I'll have to explain what mistake I made, what correction I've made, and the impact that's had on various numbers, such as income from continuing operations, income from discontinued operations, the earnings per share, etc. for the last couple years. We have to go back and make all those corrections, and we have to explain that in the notes to the financial statement. So once again, the journal entry is interest expense debit, notes payable debit, cash credit. Cash is the installment payment that was done correctly. I understated expense, therefore I overstated how much I'm decreasing the liability in my books in this journal entry. By doing that, I overstated my retained earnings and understated my the liability. So I have to correct that by now decreasing my retained earnings, that's equity, and increasing my liability.